Hey, everybody. Welcome, and thanks for being here this afternoon. It's great to see you all. My name is Laura Bolio, and I'm the VP of Marketing here at Holistiplan. I have the special privilege of being able to introduce Megan Dowd. She's our Director of Product Insurance, and she has 4 specific designations, each related to specialized knowledge in different areas of insurance and wealth management. And so before we dive into it, yes, this webinar will be recorded. Yes, we will send out the slides and the recording in a recap email. And if you have any Q&A, if you have any questions, drop it into the Q&A and we will answer them as we go. And anything that we don't answer during the webinar, we will send the answer in the recap email. So, Megan, there's a lot of stuff going on right now with insurance. I have never seen insurance as top of mind, like for America, as it is today. I mean, we have the wildfires in California going crazy. Insurance, especially homeowners insurance, is hugely top of mind.
Could not agree more. And I think our tool can help solve some of the, questions that advisors are currently getting today and just make that conversation a little more comfortable. So without any further ado, I am Megan. Like Laura mentioned, at Holistiplan. I was an insurance broker for 15 years. I worked primarily with financial advisors and providing insurance support for their clients. And that's one reason I joined Holistiplan was I really wanted to be able to share the knowledge and the different aspects of personal insurance and risk management with a broader audience. And I really feel our tool does a great job in allowing advisors just to, again, start that conversation and really add value to the P&C coverages that their clients have or potentially don't have, which is another great resource of our tool as it helps point out those gaps. So when I'm not doing insurance stuff, I love spending time with my family, riding horses, and I do have 2 young children. So a lot of the things that we talk through apply to me and my family as well. And again, I think it's a big topic that you as advisors are probably asked about and may not have always had the resources. And so today we're going to talk through that resource that's now available, which is our risk management tool. We'll talk through the home review, the auto review, and the excess liability. They'll also talk through the actual report that's generated and some different key points for you guys to discuss with your client. And then the agent letter, which really in my mind is one of the most important pieces because this is what bridges the gap between you and that insurance agent to where you don't have to become the professional, but you can help your clients curate an awesome letter that asks the questions that they want answers to then provide to their agent. So we're going to take a deep dive into all of this. I look forward to answering questions along the way, so please don't save them to the end. So the first thing with our tool is you can actually set some parameters within our system to make this as customized to your firm as you would like. So when we talk about the parameters, we're going to go into our insurance parameters. And this is where you guys can set things for like the last time the insurance was shopped. So you'll see we do default some of these. I am going to refer back to this parameters page when we take a deep dive into the products. So again, if some of this seems like a lot, just know we're going to put it into practice here shortly, and we can always circle back to this piece at the end. But then you'll notice for the homeowner's product, you can enter in different limits for if something's going to show as a red, yellow, or green insight. We can also do that with the personal property. We have a few ways for you guys to kind of color code that. So whether it's just based off estimated value, the percentage of the dwelling, or where they like to shop. So you'll notice on this option, you can either kind of go the low, medium, or high, again, based on more of your client's shopping habits if you don't want to throw a percentage in there. We also talk about the scheduled coverages. So again, this is something that your firm may not want to always highlight with clients, but we do automatically bring this as a piece to the conversation unless this box is unchecked. We also have things like water backup limits. So again, depending on the state you live in, I live in Missouri. A lot of homes here have basements. A lot of those are finished. So in my state, I'd probably have 25,000. In a state where there's no basement, you may be comfortable with 10 or 15 as your firm parameter, but just know, again, these are what's going to help trigger some of the color coding as we dive into the reports. The auto is, again, another great piece to where you can set those minimum limits. So obviously every state has their own limit for your clients to be able to legally drive, but that might not always be enough in what you as a firm feels your client should carry. So you can enter in those options here. Same with the deductibles. I really like this insight for a value. So basically, if your client's vehicle values are under 2,500, we're going to flag it for them to reconsider collision and comprehensive coverage potentially, because there is a large cost associated with these coverages that, based on the value of the car, may not make financial sense for your client. And then we'll talk through the replacement cost coverage. And this is, again, kind of a bell and whistle of insurance. So not all firms want to show this. And then rental car coverage. So we will continue to build out these parameters as we add to our product. But again, this is a great way for you guys to customize the settings to your firm's preferences and make sure that you're not missing any big topics of conversation. So next is, how do you start the review? Now that you've set your parameters, we're going to go into our client dashboard, which should look familiar to most of you on this call. If you're current users, you'll see the typical tax stuff. And then down here, we have the Create Insurance Report. For this, you're just going to click on the report. It'll allow you to select a date, select OK. And then from here is where we upload our declaration pages. And declaration pages are the coverage pages for your client. So this is what outlines the home coverages, the auto limits, and the umbrella policy. It is important that you put them into the correct category. Otherwise, you will get an email from our support team stating we cannot review it within the category it was dropped and that you need to re-upload. There's a few ways you can do this. You can just click here and go into the files, or you can drag and drop files into this system. One thing to note is that right now with insurance, we do have the policies going through our OCR system like you're used to for tax. However, we've put a second layer of review in right now as we're still building out our OCR engine. So there is a team member that is reviewing these, kind of verifying the coverages that appear on the deck page and making sure that they appear properly in our report. Obviously, some slip through the crack here and there. Our team is great, though, about fixing them very quickly for you. So always know, reach out to our support if there's ever questions around the data. But we do our best to review to make sure what you are putting in front of your clients is accurate and useful. So I'm not going to bore you guys with kind of watching the whole upload process. But from there, your home, auto, and umbrella would upload. Then you get an email from us. Once you click on that email, it then brings you back to this review site. So this is one where I uploaded the home, auto, and umbrella deck pages. The OCR team has gone in and entered their information, and now I have a full report. So before we dive into the report, I do want to highlight these icons on the side of our screen. So this first home icon, this again is where you're going to provide answers that specifically apply to your clients that might not always be on the declaration page. So up here, the policy info is usually on the declaration page. So the carrier name, the policy form. If it's not, you do have the ability to adjust once we've released it. Some advisors like their clients to shop their policy. So if you remember back on the parameter section, you can set this date. So I'm just going to throw a date in here for simplicity purposes, and you'll see kind of what that triggers on the insights here shortly. If there is a carrier that you as the advisor are unfamiliar with and you maybe want to draw your client's attention to that, we do allow for you guys to check a box and then provide an insight there. The next big enhancement we have within this home icon is our replacement cost estimator. So this is kind of a black item within the insurance world that a lot of people don't know how their insurance agents even came up with that replacement cost. So we now are giving you, the advisor, that tool in your hand so you can have this conversation a little better with your client. This also is going to trigger some insight. So I'm just going to quickly show you guys this. You will have to enter in the client's address. Depending on if it's a current or a new build, sometimes doesn't populate, but there is about a 95% accuracy with information being able to pull through from the CoreLogic system. So from here, you'll notice we have the style of home, the construction. This is really important for your clients that have older homes. Typically, homes built before 1940 have completely different building material than they do with homes built in 2008. So if you mark this as vintage, you're going to calculate it with the idea that there is true, 2x4 lumber in the home, not the new, I don't know the true measurements, but there is some differences. So pay attention to this. This is also where, for your clients that have condos, we can help calculate the interior replacement cost. So, obviously, bylaws kind of help dictate what your clients need to carry, but it's always been interesting like, well, how do we come up with the walls in coverage that my clients are responsible for? By clicking the home style of condo, the system's smart enough that it's only going to calculate walls in. So, again, home style will automatically populate in most situations, but it's always a great thing just to go back and check. And again, this condo really is a nice feature that helps calculate the walls in. If for some reason your clients do have a duplex, you can update the families here, 2-story, and then we can actually refine some material. And this is where insurance agents don't always do a great job, because a lot of times they may just let whatever populates into the Safeco, Travelers, State Farm system be what they use. And what I mean by that is a lot of times when this populates, it populates as a basic kitchen, which means it's laminate countertops, Home Depot type cabinetry, laminate flooring. And a lot of times you've sat at your clients' kitchen tables, you've been in their home, you know if they have granite or real hardwood and what that inside looks like. And that's where you can help potentially find some gaps in the cost to rebuild. So maybe they do have a custom kitchen. Maybe they have or not 14, 4 bathrooms. They also have a finished basement, attached garage. We then hit recalculate, and you'll notice that changes here. From there, we can just hit close. And when I exit out of this screen, you'll notice on our report, it updates, but you can also print out a copy of this report for your clients if you're interested. And this just gives them a great breakdown of how we came up with this number. So as you'll see here, there's a lot more data than what you guys had entered. So again, this is something they can take to their insurance agent to be like, hey, my advisor gave me this information. Can we talk through all these? Because I want to make sure what's in your system is accurate. So again, don't feel like you as the advisor are going to have to dive into this, but this again is a great deliverable that your clients can take to their insurance agent to have a deep dive and make sure all the criteria is right when it comes to rebuild. We then have some house information. So again, maybe they have a metal roof. We're going to talk about that finished basement again, short-term rentals. So maybe in the finished basement, they let people come and stay on the weekends through Airbnb. All of these different things can have different implications on your client's insurance needs. And based on them being checked, will populate different insights. So don't forget to go to these icons, because again, this is where you can really take this from just like a declaration digest to a true personalized client experience and what matters and what kind of their lifestyle exposures bring to the table. And then the last piece is personal property. So this again, when we talk about personal property, think about your client's home. If they took it and dumped it upside down, everything that falls out is going to be considered personal property. And where they shop matters. Someone can have 10 pairs of shoes, but if they bought them from Walmart versus if they bought them from Nike, are going to make a huge difference in what it costs to replace them. So again, not that you have to have an exact number here, but a ballpark figure is important to enter in, because again, it's going to show insights that could really impact your client's decisions on what is important for their insurance coverage. So once we've entered in all this information, we then hit save. You'll notice my replacement cost is going to pull up here. My personal property that I entered here. And then these are going to be the limits that pulled in, I apologize, for our declaration pages. We've pulled the dwelling limit, we've pulled the deductible, the actual loss of use. And maybe as an advisor, you don't know what all this really means. We have great insights within these info icons for you to go in and just have a better understanding so you can explain these coverages to your clients. You'll notice here my property coverage on my Cincinnati policies, 376,000, but I said my client has 400,000. So you'll notice in this awesome insight, we've marked it red because we obviously want to draw attention to that, but we've laid it out simply that this is the coverage you currently have based on our discussion. These are your needs. And this is something that I probably want my client to talk about. And so we're going to highlight this icon, which is the agent letter. We'll talk through that a little bit more later on, but it is important to know that this icon is how we're going to get it included for my client to talk through it with their insurance agent. You'll also notice that the last date shopped has a red one because based on the parameters I said if my clients haven't shopped in 3 years, I want it to be red. And you'll notice up here, my last shop date was over 5 years ago. So these insights are going to directly correlate with coverages within the client's current program. Where we then take it a step further and again add some additional value for you to discuss with your clients is going to be in the notes section. But before I jump there, I do want to point out this deductible. The deductible conversation is one that when I've been discussing with current users that are advisors, what they like most, they love this deductible conversation because as the advisor, you can comfortably discuss with your clients how much they have in savings. Can they potentially go to a higher deductible to help save on their homeowner's insurance? Because homeowner's insurance isn't for those smaller losses. They're here for the catastrophic losses where it's really a phone call between the insurance company and potentially you, the advisor, for them to get to cash that their insurance policy didn't cover. An example would be water backup. So maybe your client finished their basement over the summer. They haven't called their insurance agent to discuss those upgrades. And they actually only have $2,000 in coverage. We're going to call that out here because when that water backs up into their basement, they only have 2,000. They may be calling you for that additional 23,000. And that also goes for the replacement cost estimator. So here where my dwelling is showing that my client's only insured 72% to value, I might have a $300,000 gap to where my client's calling me. And we could apply this to the unfortunate situation in California where clients in neighborhoods are completely being destroyed. What would happen if you had 5 or 10 clients in California and all of their homes were significantly underinsured? This is where your clients' insurance planning can impact your business as an advisor. So this report does not only protect your clients, but it really does protect all the planning you all are doing and making sure potentially stopped, claim or really an unfortunate payout out of their personal pocket can be avoided by just quickly and easily uploading their declarations into our system to do its job. So the next piece is the notes. And this is where we get a little more industry overview of just things to consider or like industry need to know. So one of them is like cosmetic damage. It's becoming more and more standard for insurance companies not to replace the entire roof if only a portion of it's damaged for it to match. So maybe you have a 15-year-old roof, but the hailstorm that came through only hit the back side of the home and not the front side. Some insurance companies are only going to replace the back side of the roof unless you have an endorsement. So again, all of these might not be important for your client, but there could be some in a state. For an example, maybe someone passes away, you guys are talking about estate stuff, whether that's adding a trust. There's different topics that you could add on, again, depending on lifestyle needs that just allow you to show a little more consideration about the client besides just the typical declaration page type conversation. Before I jump into the auto, do we have any questions on the home?
We do. We have a ton of questions.
Okay.
We have a ton of questions. All right. So the first one is, does Holistiplan provide some guidance on what those limits are per state?
For the auto limits, like underlying auto, I
I think
assume.
so. This one came in right at the beginning.
Okay, yeah. So at this point, we don't. I will say in the next month or two, we will have the state minimums being pulled in as a insight within our system that shows if you're in Missouri, the state minimum is 25,000 per person, 50,000 per accident.
Oh, awesome. Okay, this next one says, sometimes the homeowner's form number is not obvious on the declaration pages as different insurers have different form numbers. Do you have any recommendations on decoding that?
No, I really wish I did, but your clients can go back to the insurance agent that sold them and they can easily tell them. So again, it might be a little bit of homework, but this is where let me see if I can update it on this end. So now that I've shown this as an unknown, I can add this to the agent letter so my client can bring that question up to their insurance professional, and I'll quickly show you what that looks like. It's just going to say what policy form does my homeowners use? So again, you as the advisor don't have to learn how to write that, but it does pull it back for them to discuss. But no, unfortunately, that's, I think, one of the secrets of insurance companies is how they write those.
All right. Next question is, what are the definitions of a vintage versus a standard build?
Yeah, so vintage is going to be built before 1940. And then otherwise it's going to be standard construction. So if you have a client whose home's been built before 1940, but they've done that gut rehab potentially, where they've really gone in through the studs out, that's where you would select the combination of standard and vintage, meaning like the exterior, it probably still, like on a vintage home, they have true brick. It's 4 layers of solid brick, not frame with like brick veneer. So that's where that combination is important, saying like the exterior is probably still vintage, but everything on the inside has been standardized to drywall from plaster and those sorts of things.
That's very helpful. Next question says, does the ranch option only look at the ranch house or the entire ranch property?
Just the house. So that's just really meaning it's a single level that goes. It's not and does not mean farm.
Okay. The next question says, will there be an IntelliTip on what each of these building types equates to? Could be a future iteration.
Yeah, so it's coming. We actually have our developers working on that now. So hopefully by the end of Q1, you guys will have info tabs within all of the core logic features so you can understand what even like the bathroom grades are. We're going to give a description with a picture of this is what a luxury bathroom looks like. This is what a standard bathroom looks like. So yes, we will be adding in some tool tips for you guys to better navigate.
Awesome. Okay, this one comes from Kelly. What is the best practice to gather the specific information if we don't know all the details of a client's home? Phone call to go through it together, send questions in advance?
So the idea is the questions we're asking, you potentially know, if not, yes, but I don't know if it's really your job as the advisor to take a deep dive into the replacement costs, more prepare your client on like, hey, you need to discuss the bathroom types you have. You need to tell them that you have a finished basement. I don't think it's your job to say, how many doors do you have? How many, do you have a bay window? Like that really is the insurance professionals. But I think what our report does is it gives you that awesome document that you can say, hey, look this over with your insurance agent to make sure it's right. But at this point, as the advisor, just knowing the types of bathrooms they have and if they have a finished basement, potentially you could, I've heard some agents just add these questions into their onboarding process. So when clients are filling out other things, they just have a quick, do any of these apply? I'm happy. We can include that in an email if you guys just want a list of what house information we ask for so you can easily implement it. But there's a few different ways to gather that.
Okay. Do you want to do maybe 2 more questions and then we can jump back into it? Okay. So Christy asked, can you enter specific personal property if it's jewelry or art, etc.?
So yes, we can show you guys a little back end. So right now we don't have it as a standalone, but if it is included on the homeowner's policy, which mine is not, we could add it here. So it's just really going to depend if it's included. If we are working on a standalone though. So if the jewelry is not within the homeowners, we don't have a product to review that. But if it is included within the homeowners as an endorsement, you would see it listed on our report right underneath the personal property. It says scheduled with a 50-character description. So it's just going to say like Rolex, $10,000, engagement ring, $15,000. So it won't be as descriptive, but there is descriptions with dollar amounts.
Okay. And then the last question that we're going to take for right now comes from Mark. Does Holistiplan review renters insurance policies?
We do. And our system's actually smart enough on the back end to where if we know it's a renter's, you're not going to see things like dwelling limit because obviously renters don't have dwellings. So our report does change slightly for those renters when they come through.
Amazing. Thank you, Megan.
Of course. So next we're going to jump into the auto. This again, I think advisors should start at these icons. We will be adding some questions in, but right now it's just going to be simple. Carrier name, again, last date shopped. These are very important questions, though, especially this adult child on a policy. I cannot tell you how many times, again, kids just graduate college, they move on, but the parents just don't seem to take them off their auto insurance. There's not lots, there's a handful of limitations within the auto when someone is just a listed driver and not household member. And by checking this box, we're again going to call that out in our report. Same thing with child drivers on the policy. I'm going to click that so you all can see what that is. But this is just going to help drive those conversations with your client and the insurance agent on, are we missing any discounts? Are there any things we should consider? And then if you remember back to the parameters, we set that value for if the vehicle is under, I think I put 2,500, we're going to set an insight to populate. So on this car, just so we get the right insight, I put 2,500. This vehicle is 25,000. It's very important to understand that this is a value you as the advisor are going to enter. So if your client has agreed value on the auto policy, you will not enter that here. We actually enter that on the back end. But this is something that you guys could gather from like a Kelly Blue Book, or maybe you have a system in your tech stack already that helps you value clients' property. But it's also very important to tell your clients the value here does not mean that's what they're going to get at time of claim. This is strictly used to kind of determine if carrying full coverage is really worth it or not. And I'll show you here later on. The last thing is just this lien paid off. This becomes a headache for clients if they paid their car off, but we still see it on the deck page, because let's say they have a total loss. They're going to have that check for that total loss made out to the client and the lien holder. And if they no longer have a lien holder, they then have to send the check back, get it recut, take them off the policy before the check can be cut. So again, this is where you just having some knowledge about your clients can save them headaches in the future. And again, just so we can kind of show that insight, I'm going to show, actually, we'll show this car has a lien, but still on policy. So then we hit save. We're going to go down to our auto section. So you'll notice here, these are our bodily injury limits. So again, maybe you're like, well, what's the difference between this per person and occurrence? You can just hit here. Property damage, what does that really consider? Property damage is one that I do feel a lot of people overlook. This is the limit you have to replace vehicles you're in an accident with. Most cars out on the road today are valued over $10,000, $15,000. So when you see your clients only having 10, 25,000 in property damage, that should be alarming. Again, this is where those parameters you set can help throw out the right triggers or insights based on, again, where you feel comfortable as the advisor. And then we have our uninsured motorist. So again, if you don't know what that is, you can click here, but that's going to be coverage for your clients if they're involved in an auto accident with someone that has no insurance. And then we get to the vehicle specific details. So this is where you can see, again, those values we entered in on the auto icon. We then list the deductibles. So sometimes clients do have different deductibles per car. So this is a great way to see that and get them potentially all to the same dollar figure. Maybe it was done purposely, maybe it wasn't. So again, just make sure their coverages and their needs are aligned. And then we also now call out the glass deductible. So some clients buy up their coverage, so their comprehensive deductible does not apply at time of a glass claim. So we now do call that out and we'll provide an insight around glass coverage. So a few of the insights that populated based on our parameters, the deck page, and the information I entered in as the user are going to be this value too low for collision. So again, there's a cost by me carrying comprehensive and collision. It's probably about $500 to $600 a year. And if I have a claim, the max I'm probably going to get is around $2,000 for my car. So is it really worth that? Most insurance agents aren't comfortable having that discussion because they don't know the client's saving. They don't know if they live paycheck to paycheck or if they do have $40,000 sitting in an account to where they could go buy a $5,000 car tomorrow. And that's where you as the advisor, you do know that. So you can say, hey, again, we have some rainy day funds or we have whatever you've earmarked those as. It's okay for you to go liability only. You don't really need to carry full coverage on your car. And again, for those older vehicles, if it's a total loss, filing the claim may end up impacting your rates from a rate increase to eligibility. So this is where you again can just really add that different perspective for your clients that they're not used to having, and reassuring them that they're financially in the right position to maybe take on a little more risk than they once were. Again, we call out that adult child on the policy. This is a big thing that your client should be talking with their insurance agents about. We talk about, again, those children. We have some rental car conversations. And we've also started to do state stuff, which I'm super excited about because not all states are wonky, but the states that are wonky are really wonky. So one of them is like the ability to limit your ability to sue. So in certain states, Georgia, Pennsylvania, we'll see options for a limited tort or full tort. It's also called like verbal threshold and some other lovely lingo. But now we're going to call that out for you guys. So if we see on a client's deck page that they have limited tort, you're now going to see that as a red insight. Again, maybe they meant to do that because they want to save $500 a year on auto and they're not worried about the ability to sue after an auto accident if the other party doesn't have enough. But maybe they're like, hey, I have 3 young drivers, and if my 16-year-old gets in a car accident and is severely injured or whatever the cause may be, I want the ability to sue that other party. They may want to pay that extra $500 a year to remove the limited tort and have full tort. So again, this is where you can help your clients determine, do they have the $500 in their budget? Should they invest it on, removing this limitation, or is this limitation okay based on their lifestyle, based on their auto needs, and those other conversations? Again, it might not be a bad idea for you to potentially hop on the phone with the insurance agent and your client if you'd like to be more involved. But our idea with our insights is we're providing enough for you and your client to have that financial conversation to give them the confidence to go to that insurance professional and make the decisions, knowing kind of how it affects their overall financial and their protection from a wealth defense. The other thing I want to note is while we have our pre-populated insights, you can add in your own. So you'll see here, I actually added one in for a new driver, consider a new driver, and we marked it as red. Maybe we know that we're going to call this nanny coverage. And we know adding nanny to home and need to consider auto options. And then by including this, we can mark it as red. Now it's on this report. So when they take it to their insurance professional, they can discuss some of these newer things that are coming into the household. We also have notes like we do on the homeowner. So again, these are going to be more industry type specific things, but could really add value to your clients. One is outside the US. A lot of auto policies only provide liability in the United States and its territories. But if you have clients that travel outside the US a lot, they rent cars, they may want to go with an insurance provider that provides worldwide liability for rental cars. So that's going to be a Cincinnati, a Pure, Chubb. There's a handful of carriers that offer that. But again, this is where you can just call out that this is part of my client's life that they should probably discuss with their agent. Same thing with like the ride share. OEM parts, I think this is a huge one. A lot of people don't know that if your car is in an accident and it needs repairs, insurance companies are legally allowed to repair your car with aftermarket parts. That's why sometimes if your clients go to take their cars to a dealership, the insurance company says, okay, yeah, you can take it to the dealership, but we're only going to pay X amount of dollars because we're going to pay the cost of the aftermarket parts, not the original equipment manufactured parts that the dealership wants to put in. So again, depending on how your clients live life, their expectations at time of a claim, OEM parts could be a really big piece that adds a lot of value quickly by just acknowledging like, hey, you should talk to an insurance professional about this. And then again, there's whole insights. We go back to this tort coverage. So just a little bit more of information. So maybe your clients have a second home in Florida and you want to understand, like, does this impact them? You could add this either to the agent letter, or if they don't have tort needs, you can also decide to show or hide it within the report. So before I go to the umbrella, do we have any questions on the auto product?
We sure do.
Okay.
We sure do. Okay, so here's a question. It says, how does carrying only liability of auto impact the PLUP umbrella policy?
It doesn't. So as long as liability is there, your umbrella policy can pick up. This is a big misconception. Umbrella coverage is only for liability. So if your home burns down and you don't have enough replacement cost, your umbrella is not going to provide extra coverage. It's only going to provide coverage if you don't have enough liability on the home or you don't have enough liability on the auto, which is why the comp and collision doesn't affect the umbrella policy.
This is a planning question. So it says, with most of us being financial advisors, how do we connect this type of a review to the normal planning process?
Yeah, so I've seen advisors do it in different ways. So some of them have like risk management quarter. So obviously this time of year there's a lot of taxes, but maybe it's a good time to add value in the summer to talk about this. There's usually a lot of changes from kids, they've added pools. But I do think adding it in from just a simple, have you checked on your insurance lately? Have you talked about your insurance? Most people, I think the stats like over 70% of individuals have never had a professional assessment of their insurance done. Or you can ask, when's the last time you looked at your insurance? And if they say college, high school, when we bought our home, that could be the trigger that, hey, it's probably worth you looking at it. But if they say, hey, I talk to my agent every 6 months, may not be. But there's different ways, and we're happy to collaborate internally if you want to follow up on different, ways you can bring this into your practice.
All right. This question comes from Scott. What are your thoughts on using credit card coverage for a rental car versus your own auto coverage?
It's way so it's going to depend. Every credit card company has their own fine print for what that looks like. I think the benefits of not using your auto insurance for a rental car, so whether that's buying the rental car coverage or your credit card, is it doesn't go on your auto history. So when you decide to take the car into the park in Colorado and you accidentally hit a huge divot and dent the front end, if you are relying on your auto insurance, your deductible applies, and it's now going to be a claim on your auto for 3 to 5 years, where your credit card probably has a smaller deductible and it won't affect your rates. Same thing with if you get the rental car coverage through the rental car company. And then those are probably the biggest. There's also a few gaps, but I don't think credit card companies cover the gaps. The really only buying directly through the rental car company is where we see the gap of diminished value and loss of use covered there. So just depends.
Yeah, good feedback. Good insider tips, Megan.
Of course.
All right, back to you.
Okay, awesome. So the last thing we'll do is our umbrella policy. So again, we're going to start at the icon so we can customize this as much. Right now, the umbrella does not have a lot of extra questions. We will be adding in some lifestyle questions. So some of them coming does your client sit on a non-for-profit board as a director or officer? Do they have employees in household? So those nannies, those healthcare employees, and then are they interested in some like third-party liability? So again, more to come, but right now the biggest thing with the umbrella is this at-risk value. And we do give you a nice little note about what this means. To be clear, this is not their net worth. Sometimes it's easiest just to put in their net worth. So again, this is going to be a firm decision. But really, when we talk about at-risk value, this is what value of their net worth is accessible by creditors. So why that matters is if they don't have enough insurance, whatever is creditor accessible is what a judge basically can go after from a client perspective and say, hey, again, there's 100,000 in uncovered damages. Client now need to pay those. The important thing is your clients don't have to have a net worth to be worried about umbrella coverages. This at-risk value is going to trigger a different insight based on if they have under or over insurance. But your clients that are renters that live, are growing their assets right now, umbrella coverage is just as important to them because they can't afford to have an uninsured loss and have their wages garnished. So just because they don't have liquid assets doesn't mean in certain states that a judge can't come after their wages. So again, I just like to harp on that real quick. Umbrella is not just for the wealthy. It really is for people in any financial situation. And it really is more driven by their lifestyle needs. So how far do they commute to work? What do they do when they're not working? Do they gather people at their homes? Do they have dogs? Do they have kids? All of those things are really what indicate when an umbrella is needed, not because someone's worth $5,000 or $5 million. So again, at-risk value, it's going to be up for interpretation. Happy to have a further discussion there. But for this client's example, we're just going to put in $3 million. Then I hit save. I'm going to go down to my umbrella section of the report. From here, you'll see again the carrier, annual premium, the policy date. This is my at-risk value that I entered. You now see that I have $1 million in umbrella coverage. This client also has $1 million in uninsured and underinsured motorist limit. So you'll see that here. But one of my favorite things that our report calls out from an umbrella limit is when the underlying limits don't match. So you do have to provide a full deck page that has the underlying limits, but I cannot tell you all how many times a client would send me their declaration pages and their auto limits did not meet the umbrella limits. Whether that's because they had one car with Progressive and the rest of them was State Farm, or they bought a watercraft and had that with Progressive and the rest through State Farm. There was a lot of reasons, but I think this is a great way to quickly point out a major gap that's usually easy to fix and not a lot of premium. But again, if there's a gap in coverage, this means that your client's required to carry 250,000. They only carry 100,000. So if there is a bad auto accident, they're going to have to come out of pocket $150,000 before their umbrella kicks in. So again, who just has 150,000 laying around not with an advisor? Not many people. So this type of incident is not only going to, again, affect your clients, but it's going to affect you. So again, I think this is a great call out. We also called out, obviously, the umbrella. So I right now have $1 million in coverage, but I said I had $3 million in at-risk value. These are red insights. So again, I can include these on my agent letter. I can hide them or include them in the report. And when I say hide or include them in the report, I'll show you what the presentation mode looks like, but that's where these eyeballs come in. So you'll notice that's grayed out. So it's not going to show. And then when it's this darker black, you will see it. And then same thing for these notes. So you'll notice some business activity, also that board notification. We are updating a few of those as well. So just stay tuned. You'll start to see enhancements roll out probably on a regular basis over the next few weeks on all of the products. But before I jump into the agent letter and just the overall review, do we have any questions on the umbrella product itself?
Yes, there was one question on umbrella. So this one comes from Jordan. Does umbrella cover above and beyond homeowners liability coverage? And are there situations where it would cover something homeowners would not?
Yes. So the short answer is yes. The long answer is it depends, because depending on if your client has excess liability or an umbrella liability policy makes a difference. And high level, the difference is excess means it's only going to respond when there's underlying coverage in place. So if there's not personal injury on your homeowner's policy and you have an excess liability policy, your excess liability is not going to kick in. However, on an umbrella policy, it can act as first dollar. So in that example on a homeowner's where you don't have personal injury on the homeowners, but it's an umbrella policy that doesn't exclude it, then yes, your umbrella can be first dollar for personal injury. And personal injury are things like false arrest, slander, liable, those types of situations. And that's one of the more common ones that we see not covered on a home, but then being able to be picked up on an umbrella type liability policy.
Okay. This one comes from Parveen. What are the general recommendations to arrive at umbrella liability?
Yeah, so I personally just one, liability is so cheap to buy that really spending so much time on trying to figure out what's a creditor asset, what's not, their net worth is really an easy number. You all probably have it. And again, unless there's a $5-10 million difference between what is creditor and not, the difference in buying a $3 million umbrella and a $5 million umbrella is $200 a year. So I would not lose sleep with your clients on like trying to like dive into getting the most accurate number. I mean, so it depends. The easiest way is just using their net worth, knowing that you're giving yourself a little cushion because 401k is pretty well protected. But if you don't want to do the math, you still want to add value. I think the net worth is the best way to go about it.
Okay. That should be easy enough.
Yeah. And if you want a math problem, we can again talk offline. I can help you come up with some math, but it's just going to vary by state. There's homestead protections, and it just becomes a rabbit hole in most situations.
Okay. Are there a list of at-risk items? I could imagine creditors can go. I would imagine the items that creditors can go after can vary from state to state.
Yeah, so we don't provide that. Again, that's where, talking with an attorney that you all are friends with or something of that sort can again help you come up with that. But 1,000% varies by state. And again, is it in a trust, an LLC? Is it a homestead? So it can get complicated the more planning, honestly, that's done with the client and documents and stuff like that.
Okay. And then this last one is about Alabama. So I've been told umbrella isn't offered in Alabama. Does that sound right?
No, it doesn't. There might be limitations. So like I know in Florida, it's really hard to get over 10 million in coverage. It's like near impossible. It's out there, but so there might be limitations in Alabama. A lot of times though, if your client's getting that answer, it's because they're working with a direct writer that specific writer can't write it. So whether that's Geico, Progressive, State Farm, but there might be a broker out there that could write it because there's lots of umbrella paper. So no, I'm not aware of a state right now that you cannot get umbrella coverage through besides North Carolina when the auto's seated. So North Carolina does seed auto, which means the max liability you can buy is 100,000 per person, 300,000 per accident, which will not qualify you for an umbrella policy. So that is the only state that I'm aware of that they limit the underlying liability from an auto perspective that then does not allow you to qualify for an umbrella, but it's not because an umbrella is not available in the state.
All right. That sounds good. Thank you, Megan.
Of course. So the last pieces to all of this is just like, what do we do now? You see it in your system. This looks great. How do we take it to the client? So the first thing is, again, there's a lot of great stuff here, but it probably all doesn't apply to your actual client. So I recommend doing is kind of looking through this. You can, again, this is what's going to be on the agent letter, and this is what your clients are going to see on the review. So we're going to start with the review, and then we'll move to the agent letter. So I do want them to know that the homeowner's form is unknown. I don't really care about the last date shopped, so I'm going to hide that. I do really care about this dwelling coverage. I'm just going to hide some of these just to make the report a little more presentable. Inflation rider, I think we're good on. Want to keep the mold. For the notes, we can kind of decide what we want to show, hide. They don't need any of this. Quickly go down to the auto. I do want to keep all my yellows. I'm going to keep my reds. Keep that. So once you've gone through kind of removed what you don't want to see, you'll be able to go to the presentation mode. And this is now what you get to deliver to your client. So key figures for their homeowners insurance. And again, as advisors, declaration pages all look so different. And sometimes picking out the key figures can be a task in itself. So our format is very easy to read. You know what figures you're going to kind of have to discuss with your clients, and you're potentially not going to be brought down a rabbit hole of a coverage conversation that you're not comfortable having. So you'll notice all the coverages there, the information you all input in the icons, and then just the insights that I had wanted to show up here. So it's just slightly cleaner version than what you all see on the back end. Same thing for notes, same thing for the auto, so on and so forth. And this is now what you can print out for your clients and have a deliverable. And I can tell you guys, 90% of your clients have never had insurance done this way. Typically, the insurance is, hey, I can save you $15. I can save you $1,500. Do you want to move to me? It's not, hey, here's what your current coverages are. Here's what they mean. And here's some things you should consider based on the way you live. So again, while people hear insurance, talk about insurance, this is a new way and really a way to build confidence for your clients in that wealth defense of, hey, insurance actually does matter. It can't just be a checklist or checkbox on either of our checklists. How do we conquer this together and make sure you're truly protected for all the hard work, for being able to live life? And this review is not to scare your clients. It's to give them the confidence to continue to live life the way they want to live it and know what risk have been transferred to insurance and what risk have not. Because there's also this misconception a lot of times with this dwelling limit that, oh, well, the insurance agent, I told them I bought my house for 700,000, so they insured it for that. That's fine. No, there's actually a huge gap. So your clients have this false trust that they've transferred the whole rebuild risk to insurance company, when in all reality, they've only done about 60% transfer. So a lot of great nuggets that just add value quickly. And a lot of times your clients have not seen this, in a great way to differentiate yourselves. The other piece that I get really excited about is our agent letter. So again, I know as advisors, you all have a lot on your plate. The last thing you want to do is become an insurance expert, kind of like someone asked earlier. We're already, main thing is just getting this worked into the conversations, let alone like having to add another to-do of, now my clients have all these questions, how do we handle it? So based on two things. One, our system's automatically going to put anything that has red automatically goes on the agent letter. So if you don't want it, you will have to remove the reds from the agent letter just by clicking this piece of paper here. So again, personal property was something. Maybe I do want them to talk about, let's see. We're going to talk about this water sewer backup. So I'm going to include that. We're going to talk about mold. I'm not too worried. Talk about this admitted, non-admitted. So again, for our clients on the coast, this is going to be Alabama, Louisiana, Florida, all of those. There's now markets out there that are non-admitted. And this means that they're not backed by the government. So when a huge catastrophic claim comes in and the insurance companies run out of money, there's no one there to save your client. So now insurance could potentially be a risk. Do we want to trust the insurance company and give them $5,000 a year in a non-admitted market? Or do we potentially self-insure whatever that risk may be and keep that $5,000, invest it with you as the advisor, so when that claim happens, you at least know, like, we can get to the money and there's not going to be a, oh, sorry for you type conversation. So I think this is a great one to include. Again, not that you need to know what this is, but that your client should have further conversations around it. Then we'll go to the auto. The limited tort one was something I wanted my clients to talk about. And then we will go through the notes. OEM parts, I think, is a big piece for this client that they should discuss. And we'll leave this. So from here, you then go to our agent letter, which is up here. You click it. So this is just kind of your view. And again, maybe you decide like, hey, I actually don't want that. You can delete it. You can also move, that's on the other page. So you can actually move the orders of things, and I can show you all that here in a second. But then we'll go to our presentation mode. And what you'll notice is these are not our insights. These are questions. We want your clients to not have to figure out how do they now go to the insurance agent. So they'll now have our report, which gives them the insights and a little bit of background on like, why am I even asking these questions? But then also be prepared for when their agent starts to answer the questions, like, what do they want to do about it? If they only have an HO3 or HO5, is that okay? What about the dwelling replacement cost? If after my conversation with the insurance agent, they say it's not good, then I'm going to move forward. So again, this is just really trying to help bridge that conversation between you, the advisor, and now giving kind of homework to your clients and what they need to do in the most graceful way possible. One thing I will also mention, if a client does not have an umbrella policy, we do include that as a note within the policy and in the program that you should consider an umbrella. So you don't see that now because we have one, but I did want to bring that up, that we do call out umbrellas as being important for everyone when they're not included in the initial upload. And then real quick, what I wanted to show was just our ability to move these around, and if my system would let me do that, but you can move them. I'm just having technical difficulties, so I apologize. But that's kind of our PNC tool at this point. Again, being able to easily upload declaration pages regardless of what they look like, the carrier they come from. We're going to put it into an easy to read format that you can discuss with your clients. You can choose what's priority, not priority. And the color coding, again, just really draws attention to the action items and then gives them kind of a pat on the back for what they're doing right. Not a lot of times we're always rewarded or told we're doing things right. So it is nice to see sometimes when your clients have full green reports that, hey, you're doing good in adulting, and like, here's a report to confirm that. So not always a bunch of reds and yellows, sometimes it's greens, but a great way to start the insurance conversation, especially if you're not doing it. Sometimes finding an insurance partner can feel overwhelming. And this is a great way to add value. You don't have to add team members. You don't have to add a external partner. You can keep it in-house, but still start the conversations your clients truly want to be having. If they're not calling you right now, they will call you in the next few years, whether it's pricing increases, they want to add their 16-year-old driver, and what do they need to think about? There's just a lot, and you'll learn a lot by using the tool. So you can quickly answer those questions and may not always have to refer to the tool as time goes on. So I think that was everything I had for today. Do we have any last questions?
Yep, there are a couple. There's always more, right? There's always more. Okay, so this one comes from Mark. Do you have any recommendations for shopping coverage?
So I would be really careful shopping coverages. So I think it's always good to do a check-in with the market, see what's out there. But policy forms vary. So you can no longer tell your clients, just go get an apples to apples coverage and have them match the dwelling limits and match this, because there's just a lot in the policies that change. Um, there's also underwriting. So once someone moves insurance carriers, they then typically have like a inspection done. So if your clients move homeowners policies, travelers may come out and inspect their home. And now there might be issues like, hey, there's a tree overhanging. Your client needs to cut that tree back. So shopping, I think, is okay, but actually moving carriers on a frequent basis is where I kind of have the red flag, just from coverages actually change. There's a lot of underwriting processes that could cause your clients to do more work. But a lot of times, if they have a new driver, if they're buying a new home, if there's been like a larger change in net worth, those are kind of triggering events to where shopping does make sense, or if they've like outgrown their current situation.
Okay. Okay, is there a source that you have for high net worth insurance professionals?
A source like for us to refer you all out to high-end insurance
Yeah, I
professionals.
think that's the question.
Uh, yes, we're working on like formalizing some stuff, but if you have an immediate need, I'm happy to discuss and can connect you with one of the beta partners.
Okay. This next one comes to This next one comes from Ryan. So this is a question about pricing and how to access insurance.
So we are fully working on that right now. Insurance is available if you have 150 households or more within the tax product. But coming soon will be the ability to add on for any level of household and potentially a standalone product. I'd say give us a few months, but it is in the works.
Yeah, work in progress. We do have a 7-day free trial to test insurance. So if you have a subscription with us now and you wanted to test insurance, you could definitely do that through the free trial page. So it's well worth it. It's a super cool tool like Megan showed, and the team is working super hard on this. I mean, you can tell just with the depth of rollouts that Megan's team has rolled out over the last couple of months. So
And feedback is always great. So you all have been phenomenal with the tax tool. I'm a little jealous on how much feedback you all give. So please, if there's things you'd like to see, different, state specific stuff, please continue to send that in to us, because we do listen. And I love to hear that from you all in making this a tool that really suits the needs of our users.
yeah. Okay, this last question that just rolled in, where do we find the cost information on this module as an add-on? So right now, I think the cost is just under $2,000 to get the 150 households plus. And then when you get that, that will include premium tax and it will include insurance. So you can get started right there from our website on the pricing page, and you could start with the free trial and go from there. But yeah, let us know. So send us any questions that you have. We're always happy to answer. Anything else, Megan?
No, we're right at time. So again, thank you all for participating. I love the questions and super excited to see you all start to use it.
All right. Awesome. Thanks, Megan. See you soon.
Have a great day.
Bye.